This media coverage is brought to you by Risk Africa in association with SSP Worldwide, leading providers of insurance technology solutions.
It's day 2 of the annual AIO conference 2015. We're coming to you from Tunis, Tunisia, and this is Risk Africa TV. I'm joined now by Israel Kamuzora, Commissioner of Insurance at the Tanzania Insurance Regulatory Authority. Thank you very much for joining us. Israel, just share with us a little bit, tell me about the state of play in the Tanzanian insurance market at the moment and what your key focus areas are as the regulatory body.
Well, thank you. The Tanzania insurance market is an old market to start with because we were a British colony and insurance was brought by the British to our country and they practiced insurance during the British era. Then after independence in 1962, where the state formed a national insurance company called National Insurance Corporation, which basically was given the powers, to offer insurance services in Tanzania. And then for about 35 years, we were a closed economy, and we had, that state company doing business. And then after that, we opened up, and now we have 30 private companies that are doing business in Tanzania. Well, the market size is smaller than Kenya, of course, which is our neighbor, but much larger than the rest in East, and Central Africa. And we are now actually focusing on more of offering, insurance to the poor, the microinsurance. And we have recently published, the guidelines for Takafu insurance, that is Islamic insurance, because we want to include as many people as possible in the insurance, business. So basically, that is our focus.
Today we heard a very interesting presentation talking about political risk and violence in the African context. We heard that 58% of political risk or countries that are exposed are in Africa. So this is a key issue for the continent. And there was discussion around capacity and responding risk pools and the need perhaps for public-private transfers and partnerships and for more risk pools to be created within the local context. Tell me a bit about your take on that.
Well, I think this is a very timely topic to be discussed at a level like this one because Africa is still perceived as a very risky, continent. Those that want to bring in their, investments in Africa, they think twice before they come to invest in Africa. Although it is said that the return is the highest in Africa. If you put money in Africa, you are assured of a return that is above, 10% or so, which you cannot get from, any other place. But still, people fear to come to Africa because they perceive it as a very risky continent. This has been an issue, actually, and some 15 years ago, the World Bank worked out something with 11, states, which were forming the COMESA, that is a trade, area within East and Central Africa, to establish a company called African Trade Insurance Agency. This company has its headquarters in Nairobi, and the World Bank actually still provides, the supervision of the way that the African Trade Insurance Agency does business. The agency is established with the responsibility of providing political risks cover, and it has done, very well in those 15 years. In our meeting today, somebody actually referred to a live case in Kenya whereby the Westgate Mall was attacked by Al-Shabaab, terrorists, and the claim came to $115 million to the owner of the mall. I'm glad to say that $2 million of that claim has been paid by this company because the company actually was the insurer of the mall, but majority of the risk, of course, was placed in the London market. But on their net account, they paid the $2 million, which was their net retention, and the rest, was a recovery from the London market. So what I'm saying is that on a day like this one to discuss about political risks in Africa and how we can mitigate these risks is very important because if the investors and would-be investors will hear that in Africa we are trying to mitigate risks through insurance, and risks of the political nature, which is about war, commotion, confiscation, and the kind, I think they will be more than happy to come and do business in Africa.
And is there enough capacity then in the market for the risk that we have?
Well, Africa, in terms of the risks we have, we don't have enough capacity because the risks are huge. And for you to be able to retain them, you need to have a huge capital. And also, you need to spread the risk. Even if you have capital, you have to also to spread the risk. Because like this case of the mall that was attacked by terrorists, if you pay a single claim of that amount or magnitude, you cannot remain solvent. You cannot remain in business. So for the time, for a long period of time, we shall be accessing the international markets because of lack of capacity in terms of underwriting, but also lack of capacity in terms of skills. Because we are talking of both underwriting and skills capacity. But all the same, with time, we shall build experience. With time, we'll beef up our paid-up capital, and we should be able to retain something. As I told you, this company is just 15 years old, but was able to pay a claim of $2 million. So if you give it another 15 years, it may be able to pay a claim of $5 million. Another 15 years, it will pay another, So I think with time, because the London market has been there since 17th century. That's why they are paying huge claims. They have built reserves, and they have been able to, increase their capital with, time. So I think with time, we should be able to do that.
Thank you very much for your time.